Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, February 23rd, 2009. Well, we're seeing continued selling on Wall Street from Friday's action, folks, and it was a very, very interesting day on Friday. I want to try to cover what happened Friday in the late afternoon, then we'll go into what happened over the weekend and this morning to cause a gap up, and then what we've seen since that gap up has been a slow bleed down all day long, and I really mean that. There's been barely any bounces. The market now finding itself at a double bottom support line right here. I'll draw in the lines very soon so we can see exactly how we get to them, where to look for support on the intraday, where to look at resistance on the intraday. And again, this intraday analysis is done to give you guys an idea about what we do in our nightly videos to our premium subscribers, give them daily levels to watch for, key turn dates, pivots, you name it. It all gets done in the Research Center videos at InTheMoneyStocks.com. Now, right here, guys, you have some simple stuff to go and look at. First of all, talk about Friday. Friday, we saw the gap down and the ugly, ugly selling and really capitulated right here, especially on stocks like Bank of America. Now, you're looking at the chart of the SPY right now. But Bank of America, I'm going to flip to that chart on Friday, and you can see this is what's called capitulation on this stock, where you see this panic selling, the nice little tail formation, then the reversal, and the high volume candles on the Bank of America intraday chart. Going to the SPY, you can see what happened. The market really dumped out at that point, but that was a turning point when the government basically came out and said, we're going to release more of our bailout plans next week, and this is on Friday, of course, and we're not looking to nationalize the banks. Now, that's been the big fear of the markets, the fact that nationalization could wipe out all shareholder value in anything financial that gets nationalized. Huge deal, folks. Absolutely tremendous deal for this markets. Now, what you're seeing today, and again, what you did see Friday, you saw a big, big rally taking the markets from down 250 on the Dow to positive, and then a trail off into the close right into the support line of the 20 moving average. Now, what happened today? Well, first of all, to know what happens today, what you want to do is draw your trend lines on your chart. Obviously, the high of the day on Friday could be a double top. Interestingly enough, we gap up right into that line and then start selling, and the selling just never really stops. You got minor bounces along the way, but as you can see, we're at the lows of the day down here, and it's just continued selling. Now, there are some trend lines you need to watch for. First of all, you can see right here there was a little bit of support coming right into play right here, and notice how you can have the low portion of that pullback, the lows of that pullback, where it was on the 20 moving average on Friday. You always want to look for those lows the next day because they can be key levels. So you have the high, resistance. Look what happens. You got the sell. Then you see the little tails right here and the one bounce candle, or kind of a doji of a candle, if you will. That's pausing right on there, and it just doesn't stop. Notice how this pausing right on this line took us right through this necktie level. When you see a market take out a necktie, which is a cross of two moving averages, the 20 and the 50 in this situation, that's telling you there's a lot of weakness, guys. All right, it shouldn't be that easy to take out a necktie support line. All right, one moving average is good support. You cross two together at that point where price converges, and that's a lot of support, guys. Absolutely huge support, and it really got a small little tail on that candle initially, and the next candle took it right out. That's not a good thing in the market. You stay right on this support line for about one candle, and then down to the downside you go. Again, breaking lower. Where would be the next line you look for? Well, obviously the double bottom level comes into play, guys. We're going to draw that right on the chart here, and you can see we've actually taken that double bottom out at this point. Notice how you had the two pauses right above it. That's telling you there's support. But the negative of this market right now is the market still has no idea. The government remains relatively silent on the issue about what exactly they're doing, how they're going to avert disaster, and as long as that happens, these support lines don't look like they want to hold at all. And you can see, just like up here, you got a little bit of a tail on this support line and a little bit of a pause candle, and then the sell-off. Here you got the same thing. You got a pause candle, starting to break down, broke down. Boom. Down you go. All right? Now, a couple other interesting levels, guys, you want to watch. First of all, you want to draw in your trend lines. There's some interesting channels that we want to watch for. This channel was a big one on Friday and remains very, very big in my book. All right? And this could be where we actually are headed today. Notice it's coming into play. Now, it's constantly negative, but look at this channel. Perfect parallel lines until we broke out of it on Friday. Well, now we're just about down to the upper side of that channel. This line down here will be support when it hits. Now, it's constantly moving lower, so we have to really sell hard to get there, and then you look for the bounce. That's my intraday analysis. I would be very shocked if we sold hard into this level right down here and did not get a bounce. Just remember, it continues to slide lower with every 10-minute candle that passes, so that will continue to change, okay? But nonetheless, this looks like the next area of support, and we're getting closer as I speak here. We'll check back in with this over the next couple minutes as we do continue in this video. Now, again, ugly candle, guys, ugly chart. The market continuing to not be able to get a bid. Financials, for the most part, are not that weak today. You see Bank of America up 20 cents right now. That was up 65, 70 cents, though. Citigroup also had news over the weekend that the government was going to possibly change their preferred stock holdings or their holdings into regular common shares, taking possibly up to a 40% ownership in the company. That was big news over the weekend. You started with a gap up today, but it just can't hold. And again, you're going to have to see Obama come out here and give some reassuring words. It's going to take that, folks. Ever since Santelli's rant and rave, excuse that because that is the name of our blog, but his rant and rave last Thursday, the markets have not liked that bailout plan. Now, there's areas you can see from both sides, but the basics have to be with, it comes down to the fact that the government's getting involved here in more than they technically should, and they're not being clear enough on how they're going to save the banks. If you're going to save the banks, then all right, do it and just tell the market. They have to be open to the market. They have to be transparent. Obama ran on transparency. He's got to be unbelievably transparent here and really come to fruition with some key things. Now, notice this market. We're starting to get lower here. We just started a new candle, which means this line moved a tiny bit lower, but we are close. Just on a short-term note, folks, this market's extremely oversold on the intraday pattern here. Just the fact that you haven't had any bounces tells me this is extremely oversold, and basically on the 60-minute, you'll see the same thing. The market's oversold on a longer-term basis. Now, we're going to flip to the 60-minute chart here, folks. Now, here, folks, you can see the 60-minute chart on the SPY, and we'll do our quick analysis on this chart. One thing that's blowing me right out of the water right away, first of all, you see the 4-bar surge on the 60-minute. That is near-term oversold. Doesn't mean we're going to necessarily bounce. We need to hit a key support line first, but we could be very close to a bounce on the intraday here. This is a very oversold market right here. We're now coming into that November low area again, just about $1 or $2 on the SPY away from it, trading at 75.50. Now, looking at this, now again, we had the support line of the double bottom right here. That has been taken out, but we haven't closed the 60-minute. If we were to get a bounce here and get this back above this double bottom, that could be looked at as a positive hold of that, even though we are currently below it. This is all stuff that you have to learn. Price pattern time analysis, trend line analysis, double bottom analysis, you name it. This is all important stuff. You have to know that on a 60-minute candle, even though we're below, that's not a technical breakdown until we close below. Now, we very well might. And in that case, you want to see confirmation in the next candle, obviously. Now, a couple other things here I'm looking at. First of all, looking at this trend line, and again, I'm just doing this spot on here, but it looks like there's a decent trend line right here. You can see from this point to really the high point on here, you kind of traded above it, but you never really closed that much above it, and you've failed to hold that for very long. This candle on this last sell candle on the 60-minute closed right on that green mark, and then you had the gap down on last Tuesday. Ever since then, you can't get above this trend line. Alright, very important trend line for this market. Today we gapped above it, right into the 20 moving average. Notice the yellow line here is the 20 moving average. We gapped right into that, right into this green line I drew in, and what happens? The market gets slammed. Alright, slammed to the downside. 4-bar surge to the downside. We'll keep a close eye on that as well. Now, on the downside, you can't really see much other support lines here. Why? Well, because obviously you're dealing with some levels going back to November at this point. But it looks to me like, again, there may be a little bit of a level here that looks about right. And again, it's tough to draw in. Maybe let me see if I can rearrange that. There we go. We'll do it from up here. And there is a little bit of a channel there developing as well. You can see really this market trading all the way lower here. Look at this push down, guys. And it looks like on the 60-minute, on the intraday, we might be getting close. And again, we still have a little bit. We're going back to the intraday 10-minute here. And again, you're starting to get a little bit of a green candle. If you do start to bounce, look for resistance at this point up here. If that breaks, then all of a sudden you're looking at the 20 moving average as resistance, then the 50, and then ultimately this line drawn straight across will be resistance all the way across, okay? So just keep that in mind. These are all your levels you need to know for the rest of the trading day. We do this on the daily chart at night in the Research Center videos. All the key levels in the daily market report. They're now going to include charts of oil, gold, and the UUP, the dollar index, with all the key levels drawn on. In addition, we're going to try to go into more depth in the videos at night on the gold, oil, and dollar front as well. All right, folks, keep an eye on this market. It's getting slaughtered, but you are looking oversold here. We'll see if we bounce. Take care.